Welcome back, traders. Coach Carver here, and in today's video I'm going to be showing you how to use an exponential moving average. We're going to be talking about what is an EMA, how do you use it, how do you add it to your chart, and how can you go ahead and add it to your trading plan, guys. So with that being said, let's go ahead and jump into it, and let's go ahead and get to that value. Bro, don't forget to tell them about the free signals chat. Oh, that's right, guys. I forgot to mention, we do have a free signals chat. I'm gonna go ahead and pin it in the comments below. Go ahead and check it out. Free education, free value drop throughout the week. Hopefully give you guys some additional nuggets. But with that being said, let's get back into it.
All right, traders, here we are on TradingView.com. Currently have the Euro USD pulled up, which is the European and the United States dollar. I have it on the 4-hour time frame, meaning that each and every single one of these candlesticks here represents 4 hours of price action. So let's go ahead, let's jump right into it, and I'm going to show you guys exactly how you can install moving average onto your chart, right? So if you come up here to the top, you'll see this little FX button. Go ahead, click on that here. That's going to allow you to search indicators and strategies. So what I'm going to do is I'm going to go ahead and simply type in exponential. You can see just by typing in the first few letters, you'll see here moving average exponential. We're going to go ahead and we're going to click this, and it's going to add one to our chart, right? So now that we've got that pulled up, it has its own settings here. You can come over to the top left. You'll have seen it pulled up over here. EMA, you have a little eye which will turn it off or on, and then you have a little gear here that we can change the settings on it. So depending on the color theme of your chart, however you want to change this, you can come in, find something that works well with you, and you can go ahead and select that color, and then you can come in here and put the input, right? So this is going to be the length, like a 200-day moving average or a 50-day moving average. One of the most common ones that you're going to see is a 200 exponential moving average, one of the most commonly used EMAs on the chart, right? And that's because a lot of people look for this as an overall trend. When price is below the 200 exponential moving average, you're looking for price to be creating lower lows and lower highs, looking for a bearish market structure, right? And on the flip side, when price is above the 200 exponential moving average, you're going to be looking for price to create highs and higher lows, higher highs and higher lows, right? You're looking for price to continue upwards. And what's really cool is what a lot of people have noticed is you can actually use the EMA as a level, like a psychological level of support and resistance, right? So you can see price respecting that 200 exponential moving average there, pushing up, right? And then eventually it breaks through it and then retests against it and then turns bearish, right? So that's when you have essentially one exponential moving average on your chart. You can use that to your advantage, right? You have different types of traders. You have scalpers, you have swing traders, and you even have intraday traders. And a lot of people are using a lot of different EMAs, right? A scalper may use something like a 9, or even, I've seen people use like an 8 EMA, right? Using like a 25 and a 50, right? One of the most common pairs that you're going to see set up is a 200 and a 50 exponential moving average. You can go right back up here to the indicators and strategies button. You can type in moving average exponential, or you can even star it so you'll have it in your favorites for now on, and then you can go ahead and click on that and we'll do the same thing. You click on the settings, you can change the length to 50, and then you can even come in here and change the style, the thickness, right? And you can have all that set up. You can have your colors. So now we see, and represented in white, I have a 50 exponential moving average, and represented in yellow, I have a 200 exponential moving average. Now what's really cool is when you have these two indicators on your chart together, you can actually use it to see some sort of signals. So if you see here, we have the white exponential moving average crossing down our 200 EMA, and it makes that little X, right? And what we see is right as that's doing that, price is falling. It's beginning to become bearish. That is a bearish signal that it's essentially showing you that, hey, price is going to be moving down. Now, when it comes to indicators and signals, higher time frames are always more accurate than you would be looking at like a 1 minute or maybe even a 5 minute, right? So when you're using something like this, you can see that it's a little bit more accurate. And again, even that 50 exponential moving average can be used as levels of resistance, and you can see it being used as a level of support on a bullish example, right? So you have the death cross here, and if you look a little bit over here to the left, before we had this expansion, price had moved up, broke over the 50, ended up breaking up through the 200, and then we had a cross. The 50 exponential moving average crossed up our 200 EMA, and that created a golden cross. That's a bullish signal for price to be moving up, and that's where we're looking for those higher highs and higher lows. Some traders will even go as far as adding a third EMA to their chart, typically represented as a 100, and then you'll see that it creates a nice little pattern there, right? So now on our chart you can see we have a 50 EMA, a 100 EMA, and a 200 EMA. I'm gonna go ahead and make that 200 the thickest. And now we can see from small to medium to large, and the level of closeness, your closest one, the one that travels closest to price, is typically going to be your shorter exponential moving average. And then we have the 100, which is essentially the average of the last 100 candles with a little bit more weight added towards the recent candlesticks, right? Recent price action. And then we have the 200 exponential moving average. And what we'll see is when price makes these moves, it doesn't like to be away from these EMAs very long. You'll see price kind of bounce back. You have your first level of defense with the 50 EMA. You have your second level of defense with the 100 EMA, and then you have your third level of defense with the 200 EMA. So let's go ahead real quick, and I want to jump over and take a look at recent price action and really kind of break some of this stuff down. I'm going to turn off a couple of these EMAs. I want to get rid of some of the noise, and I want to show you, even with just the simple 200 exponential moving average, how you can use this with your trading plan and being able to use it as an additional confirmation, because you will see a lot of these fake outs, you'll see a lot of these pullbacks and stuff. But when it comes down to it, when price is below the 200 exponential moving average, we are looking for sales. And then when price is above it, we're typically looking for buying opportunities. But you will see moments like this where price comes out of that 200 EMA, but it's overall still bearish. And then you'll see instances like this where it comes up, and you got to realize that it may be just grabbing some liquidity, it may be mitigating some order blocks or mitigating some levels of supply and demand, right? And I want to show you that here. So as we zoom in and we took a look at some more recent price action, we can see a fake out that had occurred, right? So we had a little triple top here, and what you can see is if we use our trend line tool, draw across this, it's creating levels of liquidity, right? I want you guys to understand, the reasoning behind sometimes you'll see price pop out of that 200 exponential moving average, and there's an institutional reason behind it. So, retail traders are looking at an instance like this as level of support and resistance, and this is creating a tremendous amount of liquidity. And we can see in this example, we'd had a distribution phase. Price was pushing up, we started bouncing between levels of support and resistance, and what that does is it creates a bunch of liquidity, because retail investors are taught at levels of support you're buying, and at levels of resistance you're selling. So it's essentially a bouncing ball bouncing between the floor and the ceiling, and every time it touches, people are selling. Every time it touches, they're buying. An example like this, every one of these three, you have retail traders selling all day long, because that's touching their 200 EMA on the 4 hour. They're it's bearish, you're looking for that example. Everybody is for sure selling at this point, but the thing is that's created a bunch of liquidity. So the institutional investors are going to essentially push price up past that point to grab all of those stop losses so it can stop out all the sellers. So in this example, you have selling here, comes down, has a little sell-off period, it comes out and collects all of this liquidity. So at this point, it just stopped out all the buyers. Now what's left to do? You're looking for price to stop out the sellers. So price pushed up, stopped out the sellers. We had a nice level of supply there. So not only were we grabbing liquidity, but we had a level of supply here. So you take a look at an example like this, it would push out of there, but then look what happened. It melted off, and then it just kept going and going and going. It came in, it fulfilled what it needed to do, it mitigated all of those stop losses, and then you can see it just continued to sell off. And if you take a look at these different areas, I'm sure we were to go ahead and add that 50 on, you can see that it's respecting that, right? Same thing, price pushed down, came back up, tapped into this level of supply, melted off, came all the way down here, and we can see now in recent price action that we're ranging again. We're going through an accumulation period, and I'm willing to bet you can see it's because we have areas that haven't been mitigated, right? So you see levels of liquidity right here hasn't been mitigated. We can see major levels here recent right now at the time of recording this. It's 10 p.m. on Tuesday, December 21st. We can see that it's created a massive amount of liquidity here, and so we see these EMAs are coming closer together, right? What we're going to be looking for is that golden cross. We're going to be looking for a price to break up above here, collect all of this liquidity, mitigate all of this, come up, mitigate these areas as well. We're on the 4 hour. We jump here to the daily and we can take a closer look at this thing, right? We can see how long it's been away from that 200 exponential moving average, and we can see that even this 50 EMA is starting to flatten out a little bit, right? It's starting to curve. So we're going to be looking for price to make an adjustment and come up here, mitigate all of this liquidity, mitigate this liquidity, and tap into one of these supply levels to continue on the bearish side. Or we're going to start seeing some higher highs and higher lows created, and then we're going to be looking for it to turn bullish. Hopefully this video was able to help you guys out. If you guys are looking for more education, by all means feel free to reach out. I'm going to go ahead and include a link in the description and pin one in the comments to go ahead and let you guys take a look at all the same trading resources and tools and education that I use on a daily basis to help me master my craft and continue to learn and grow on a daily basis, guys. So if this video helped you out, go ahead, smash that like button, go ahead and subscribe, turn on the bell so you get notified. I'm going to be dropping a lot more videos like this. Going to be doing a lot more tutorial videos, guys. So go ahead, tune in, be happy to see you. Go ahead and leave me a comment, let me know something you learned in this video, and I'll see you guys on this next one.